Are you looking to save on taxes? Well, you've come to the right place. We're about to embark on a countdown journey, a journey designed to arm you with 5 smart strategies to help you keep more of your hard-earned money in your pocket, rather than handing it over to the taxman. As we all know, tax season can be a stressful time, but it doesn't have to be. With the right knowledge and a proactive approach, we can turn it into an opportunity to maximize our financial health. So, what's in store for us in this countdown journey? We'll be exploring 5 brilliant strategies that can help you save on your taxes. These aren't just random tips or tricks. These are legitimate, tried and tested strategies that have the potential to significantly reduce your tax liability. First up in our countdown, we'll be delving into the world of tax credits. These are some of the most potent tools in your tax-saving arsenal. They can directly reduce the amount of tax you owe, dollar for dollar. When utilized effectively, they can result in significant savings. Next, we'll be talking about maximizing your deductions. This is all about taking full advantage of the expenses you can deduct from your income before calculating your tax. Every deduction you claim is essentially money saved. Then, we'll be exploring the benefits of investing in retirement accounts. These accounts come with significant tax advantages that can help you save now and grow your wealth for the future. Our 4th strategy revolves around using a health savings account. This is a special type of account that offers triple tax advantages, making it a powerful tool for tax savings. Finally, we'll be exploring the benefits of hiring a tax professional. This might seem like an expense, but in reality, it's an investment that can save you a lot of money in the long run. So buckle up and get ready to dive into the world of smart tax-saving strategies. Starting at number 5, we have utilizing tax credits. Now you might be wondering, what exactly is a tax credit? Well, think of it as a gift card from the government. It's a dollar-for-dollar reduction of the tax you owe. So, if you owe $1,000 in taxes and you're eligible for a $500 tax credit, you now only owe $500. Essentially, every tax credit you're eligible for is money directly off your tax bill. There are various types of tax credits available, each designed to alleviate the financial burdens of certain groups of taxpayers. Some of the most common ones include the Child Tax Credit, the Earned Income Tax Credit, and the American Opportunity Tax Credit. First, let's talk about the Child Tax Credit. This one is for parents or guardians. For each child under 17, you might qualify for a credit of up to $2,000. This can significantly lighten your tax load if you have little ones running around. Next, we have the Earned Income Tax Credit. This is aimed at low to moderate income working individuals and families. The amount of the credit varies depending on your income and the number of dependent children you have. This credit could potentially put money in your pocket, even if you don't owe any tax. Lastly, we have the American Opportunity Tax Credit. This one's for students or parents paying for college expenses. You could get up to $2,500 per eligible student for the first 4 years of higher education. So if you're currently shelling out for textbooks and tuition, this could be a big help. These are just a few examples of the many tax credits available. Your eligibility for these credits largely depends on your income, filing status, and other factors. Therefore, it's crucial to stay informed and understand what credits you might qualify for. Remember, every tax credit you qualify for is money directly off your tax bill. So don't leave any money on the table. Make sure to utilize those tax credits. Next on our countdown at number 4, we have maximize your deductions. Now, why is this important? Well, understanding and maximizing your tax deductions can significantly reduce your taxable income, meaning less tax to pay. It's like finding money in the pocket of a jacket you haven't worn in a while. Pleasant surprise, right? Let's take a look at some common deductions you might be overlooking. First up, student loan interest. If you're shouldering the burden of student loans, some relief might be in sight. Any interest you pay on these loans throughout the year can be deducted. So, while you're chipping away at that educational debt, remember you're also chipping away at your tax bill. Next, let's talk about medical expenses. If you've had significant out-of-pocket medical expenses in the past year, you might be able to deduct them. This includes everything from surgeries to prescriptions, even mileage for medical-related travel. So, keep those receipts and mileage logs handy. Now, for those of you working from home, there's the home office deduction. If you use a part of your home exclusively for conducting business, you may be eligible to deduct a portion of your housing expenses. This could include rent, mortgage interest, utilities, and more. It's a silver lining in the cloud of our current work-from-home reality. But here's the catch. To claim these deductions, you need to itemize instead of taking the standard deduction. This involves more paperwork and a bit more math, but the potential savings could make it worthwhile. And remember, these are just a few examples. There are many other deductions out there, from charitable contributions to state and local taxes. The key is to stay organized and keep track of your eligible expenses throughout the year. So, let's make this our mantra. Every eligible expense is a potential deduction. Keep those receipts, log those miles, and let's make the most of every deduction you're entitled to. Because at the end of the day, it's not about how much you make, but how much you keep. So, don't forget to keep track of your eligible expenses throughout the year. Moving on to number 3, invest in retirement accounts. Now, here's a strategy that's like killing two birds with one stone. When you contribute to retirement accounts, you're not just saving for the golden years, you're also reducing your taxable income. How so, you ask? Well, the money you put into these accounts is often pre-tax. That means it gets subtracted from your income before the tax is calculated. There are different types of retirement accounts to consider. You might be familiar with a 401k if your employer offers one. The contributions you make here can significantly lower your taxable income. Then, there's the individual retirement account or IRA. The traditional IRA can give you tax deductions now, while the Roth IRA can provide tax-free income when you retire. So let's recap. By investing in retirement accounts, you're essentially putting money away for your future and lowering your taxable income at the same time. Not only do you save for your future, but you also save on your taxes. It's a win-win. Coming in at number 2, use a health savings account. Now, what is a health savings account or HSA, you may ask? It's an account you can contribute pre-tax dollars to and then use for qualified medical expenses. This means your contributions are tax deductible, a win-win situation. The beauty of an HSA is that it serves two purposes. Firstly, it gives you a way to save for health-related costs. Secondly, it helps you save on taxes, which is what we're all about here. But that's not all. The funds in your HSA can grow tax-free. And if you use them for qualified medical expenses, you won't pay taxes on them when you withdraw. That's a triple tax advantage. What's more, there's no use it or lose it policy. Your funds roll over year to year, meaning you're not pressured to spend unnecessarily. So, consider an HSA for both health and tax benefits. And finally, our number 1 strategy to save on taxes: hire a tax professional. Now, you might be wondering, why hire someone when you can just do it yourself? Well, let's dive into it and you'll see why this strategy takes the crown. For starters, tax professionals live and breathe this stuff. They're experts at navigating the labyrinth of tax codes, regulations, and latest changes. It's their job to stay updated, ensuring you're always compliant while maximizing your savings. They have the knack for finding additional deductions and credits that you might not even know exist. It's like having a personal tax detective, digging deep into the details of your finances to find every possible saving opportunity. It's not just about filling out forms correctly, it's also about leveraging their knowledge to reduce your tax liability. And let's not forget about the time and stress you'll save. With a tax professional, you're handing over the confusing paperwork and intricate calculations to someone who does this day in and day out. While they crunch the numbers, you can focus on what you do best, whether that's running your business, spending time with family, or just enjoying some well-deserved downtime. But perhaps the most valuable aspect is the personalized advice they provide, tailored to your unique financial situation. They can guide you on making smart financial decisions throughout the year, not just at tax time. Think of them as your personal financial coach, helping you to make strategic moves that align with your goals and maximize your wealth. And if you're worried about the cost of hiring a professional, consider this. The money they save you on taxes can often more than cover their fees. It's an investment that pays for itself, and then some. So there you have it, 5 smart strategies to help you save on taxes. Remember, every penny saved is a penny earned. Thanks for watching. Until next time.